As a YouTuber who teaches people about money, personal finance, and investing, I'm excited to discuss an interesting concept today. Charlie Munger, the famous billionaire investor and vice chairman of Berkshire Hathaway, believes that the first $100,000 is the hardest to amass. This sentiment is shared by many other wealthy individuals who have successfully grown their wealth. In fact, the same thing is often said about achieving the first $1 million, however. Reaching the $100,000 mark is often a disproportionately long process. In this video, I will discuss why this is the case and provide some tips on how to speed up this process to become wealthy years sooner. One of the biggest obstacles to investing is the misconception that it's only for people who already have a lot of money. Many people believe that they need a significant amount of disposable income in order to start investing, and so they delay getting started until they feel like they have enough money. However, this is a flawed way of thinking about investing. In reality, investing is one of the most powerful ways to build wealth over time, and it's something that everyone should prioritize as early as possible, regardless of how much money they currently have. The truth is that the earlier you start investing, the more time your money has to grow, thanks to the power of compound interest. Even small amounts of money invested regularly over a long period of time can add up to significant sums thanks to the magic of compounding. For example, let's say you start investing $100 per month at age 25 and you continue to do so until you're 65, earning an average annual return of 80. By the time you retire, you'll have over $300,000 in your portfolio, even though you only contributed $48,000 of your own money. On the other hand, if you wait until you're 35 to start investing, you'll need to contribute more than twice as much money each month, $220, in order to end up with the same $300,000 portfolio by age 65. So don't let the misconception that investing is only for the wealthy hold you back from getting started. Even if you can only afford to invest small amounts of money at first, the important thing is to start as early as possible and let the power of compound interest work its magic over time. It's a common misconception that investing is inherently risky and that there's a high probability of losing money. However, the truth is that there are various investment options available, and it's essential to understand your risk tolerance and investment goals to choose the right investment vehicle. It's understandable that taking the first step in investing can be daunting, especially when you're unsure about the potential risks involved. But the reality is that if you don't take that first step, you may miss out on the benefits of compound interest, which can work wonders for your portfolio in the long run. In the beginning stages of investing, you will need to contribute the majority of the money personally, which can be challenging. However, once you reach a sizable portfolio, compound interest can significantly increase your returns in dollar amounts. Even if the returns as a percentage don't necessarily increase, it's crucial to understand that risk is a fundamental aspect of investing, but it doesn't have to be an excuse to avoid investing altogether. Instead, focus on educating yourself on the different investment options available and developing a solid investment plan that aligns with your goals and risk tolerance. Taking calculated risks can help you achieve your financial goals in the long run. One of the most exciting aspects of investing is the acceleration of growth that occurs over time. Once you've reached the milestone of $100,000, you'll notice that the next $100,000 tends to come much more quickly. It's like pushing a snowball down a hill. As it rolls and gathers momentum, it gets bigger and bigger, faster and faster. Before you know it, you'll have $200,000, $300,000, and $400,000 in your portfolio. But the real magic happens when you hit the $1 million mark. The second million tends to come around much more quickly, and it seems to take a fraction of the time as the first. That's because as your portfolio grows, the returns generated by your investments become increasingly significant, and you have more capital to work with. The progress is extremely satisfying, and that excitement can fuel your motivation to keep investing and growing your wealth. Of course, it's important to remember that investing always carries some level of risk, and there are no guarantees when it comes to the stock market. But by starting early, investing consistently, and staying committed to your financial goals, you can set yourself up for long-term success and enjoy the rewards of accelerated growth. Reaching $100,000 may seem like a daunting task, but once you hit that milestone, the growth of your portfolio can really take off. This is because of the magic of compounding interest. As your money earns returns, those returns are reinvested back into your portfolio, which then earns even more returns. Over time, the amount of money you earn from these returns grows exponentially. Once you reach that first $100,000, you may be surprised at how quickly the next $100,000 comes around. With each subsequent milestone, the progress tends to be faster and faster. Before you know it, you'll have $200,000, $300,000, $300,000, and $400,000. It's an exciting feeling to see your portfolio grow so quickly, and it can be a powerful motivator to keep investing. This acceleration of growth is also what makes it possible to reach the $1 million mark. Once you hit that milestone, the second million tends to come around much more quickly, and it seems to take a fraction of the time as the first. This is because the returns on a larger portfolio are naturally going to be larger than on a smaller portfolio. As your portfolio grows to a large amount, the progress is extremely satisfying, and that excitement can speed up the process even further. It's important to keep in mind that investing isn't a get-rich-quick scheme. It takes time and patience to see meaningful growth in your portfolio. But once you start seeing the results, the acceleration of growth can be truly remarkable. So don't be discouraged by the early stages of investing. Keep at it, and before you know it, you'll be well on your way to financial freedom. Once you realize how powerful compound interest is, you'll begin to look for ways to grow your portfolio more quickly because the rewards are substantial. You'll start looking for ways to increase your income so you can contribute more to these investments. You might also look for ways to earn better returns, so the growth will accelerate. You'll become more careful about your purchases, realizing how much money you can save by investing it instead of spending it. As you become wealthier, you'll have more options, and this will become more and more apparent. As you become more careful with your spending, you'll start to see the impact of your financial decisions on your investment portfolio. You'll realize that every dollar you save and invest can grow exponentially over time, and you'll begin to see your portfolio as a tool for achieving your long-term financial goals. This new mindset will lead you to seek out opportunities to increase your income, reduce your expenses, and make smarter financial decisions. You might take on a side hustle, negotiate a higher salary at work, or start a business to generate additional income. You'll also look for ways to reduce your expenses, such as cutting back on unnecessary purchases, negotiating lower bills, or finding more affordable housing. As your portfolio grows, you'll become more confident in your ability to achieve your financial goals. You'll have a greater sense of control over your financial future, and you'll feel empowered to make decisions that align with your values and priorities. You'll no longer feel like a victim of circumstance, but rather a proactive agent of change. Overall, becoming more careful with your spending is a crucial step in building wealth and achieving financial freedom. By focusing on your long-term goals and making intentional financial decisions, you can create a bright and secure future for yourself and your loved ones. In conclusion, amassing the first $100,000 can be a challenging process. However, by taking the first step, investing early and consistently, and becoming more careful with spending, you can speed up the process to become wealthy years sooner. Remember, the first step is always the hardest, but with patience and consistency, you can achieve financial success. If you found this video helpful, make sure to subscribe to the channel and hit the like button.